Good afternoon and welcome. Let's jump into a trading session for today. We're going to call this Unlocking Profit Potential, Mastering Credit Spreads. So I want to talk to you today about credit spreads, why it was a game changer for me many, many years ago, and how it can be a game changer for you, whether you're growing a small account, a medium-sized account, or even larger accounts. Credit spreads can be an awesome style of trading. So let's jump into it. All right. So how do we master credit spreads? Let's get into it. So have you ever felt that you're on a roller coaster with your trading journey? Well, you're not alone. I mean, today I'm going to show you my roller coaster ride and how I found financial freedom and how you can do the same. So I'm Tom King. I've been in the trading game for over 3 decades, almost 4 now, not quite that old. And I've seen it all. I've seen the highs, the lows, everything in between. And it's absolutely been a roller coaster up and down. And if you've been in this long enough, you guys can all probably relate, especially the older you are. You've seen a lot of ups and downs in this trading industry and in the trading game itself. And really, when I talk about trading systems here, boy, for years, I poured my hard-earned money into trading systems, only to watch my savings vanish into the abyss of disappointment there. I was seduced by the allure of quick riches promised by expensive trading systems and gurus or furus out there. And all I got was a bunch of empty pockets and some shattered dreams out there. Nothing seemed to work for me for more than a couple weeks, maybe a couple months. And then all of a sudden, I was experiencing losses and it was just going in reverse. So nothing really worked for more than a short period of time for me. And I've tried several dozen trading systems and multiple subscription services. I've been on, probably somewhere in the neighborhood of 15 to 20 different trading systems, many, many different groups out there. Paid a lot of money to get educated. And you know what? To me, it was an investment in education, but none of those systems seemed to work for me. They just didn't match my style of trading. Some of these guys were good. They did some good things, and then they would eventually fade away and disappear. Everybody's telling me how they can trade my money and make a ton for me. Okay. But when I tried their systems, it just didn't seem to work. And I just wasn't the one getting rich in all of these systems. I probably lost well over probably 250,000, quite $250,000 or more, just chasing systems and chasing things all the time. Well, instead of strategy juggling, I tried to find what was right for me. And it was a really relentless quest. Trying every strategy under the sun, from the mystic arts of technical analysis to chasing breakout dreams. The markets tested my resolve in there, and nothing seemed to work. I felt like I was juggling dozens of different strategies at a time, always dabbling in this one, dabbling in that one. This went on for a decade or more, probably the first 10 to 15 years of trading, maybe even 2 decades of trading. I'm always looking for something to improve myself with. But I felt like I was just juggling 100 different strategies, and the market was just playing a never-ending game of cat and mouse with me, and it was playing with my hard-earned cash, and I was just getting nowhere fast. I was buying stocks, I was buying options, I was trading these strategies. I got into day trading a bit, doing the zero DTE thing, on and off. Nothing just really seemed to work for me. But the aha moment finally came. So amidst all the chaos and frustration that I was feeling and getting into, a ray of hope emerged for me. And I stumbled on a revelation, and the one thing that most traders don't focus on, and that's selling options. And you see that, what is it, 95 or 98% of all traders fail. Well, most of those traders are buying options. They just can't seem to make it work. There's the 1 or 2% that are out there doing a great job. Okay, and then the 98% of people fail, but most of those people are all buying options, because buying is where all the sexy, cool things happen. That's where you get the 10 bagger, the 100 bagger, the $15,000 day, the $1 million day. I think John Carter had $1 million day once. I mean, all of these guys are going to tell you when they have those great days, but for the most part, the members aren't seeing that. And the reason that I just wasn't consistent is when you're buying options, you're fighting theta and decay. You have to choose the right direction. You have to be right on time. So you're fighting too many obstacles. I don't think I can be right on time, right on direction, and fight theta and be right on the size of the move as well. I got to be right on everything. When selling options, I don't got to be that right. Okay, if I get direction, right, I win. If I get direction slightly wrong, I still win. And if it has no direction at all, I win. Okay, I like that. Okay, I'm no longer fighting theta. I'm getting paid for theta. Okay, so I'm taking in the money. So I'm not fighting that piece as well. So selling options is a great way to go. So I started using a trading strategy that would really forever change the game for me. And that really is selling options, but more specifically credit spreads. And if I really want to be very specific, it's put credit spreads. Not that call credit spreads aren't something that you can do. I have a tough time fighting the upside. From a person who thinks that everything's always going up, bullish in nature, I have a tough time betting against the market going up or a stock going up, because most of the time, everything goes up. There's periods of time when the market goes sideways or down, but for the most part, the market just goes up. Why are you trying to fight that all of the time by selling credit spreads? Okay, there's a time and a place for everything. We'll talk about my strategy. All right, so credit spreads. This was like finding the hidden treasure chest for me in a stormy sea of trading out there. Credit spreads, and most of the time, put credit spreads became my compass. They guided me through turbulent market waters. They made my trading consistent, and that's really what I was looking for. I wanted something that was consistent, something reliable, and I really wanted to be fairly mechanical, because that's how I like to trade. So this has really got me headed in the right direction when I found credit spreads and really started applying these. And maybe it was a bit of luck and a fairly bullish market run for many years, but I loved selling credit spreads. It was really the foundation for me to get back on track, start making the money so that I could then expand into other things and maybe get away from selling credit spreads to getting to selling naked puts, selling strangles, the 1-1-2 trades, those types of things that I do. But it was a perfect way for me to right my ship and start making consistent gains out there. And you are not alone if you've been struggling. So I understand that many of you face the same challenges that I faced, standing at the crossroads of indecision and frustration. Where do you go? Where do you turn to? You're not making money. You're trending water. You had a couple big winners, then you gave it all back. But take heart. I'm here to help be your guiding light. I'm going to help you move towards the path of success that I walked as well. And I've walked that dark road. And I'm here to tell you that you're not alone in your struggles. You just got to find people that are trading and doing what you want to be doing. And not everybody wants to trade the same way. But credit spreads can be your ticket to consistent profits. Even when the market's getting wild and crazy out there, credit spreads can consistently perform for you. The potential for consistent profits with credit spreads isn't just a possibility, it's a reality. And we're not talking about chasing fleeting gains. We're talking about building a sustainable income stream month after month, year after year. So let's get to it. Let's jump into the strategies. Okay, why I like credit spreads. Okay, I like credit spreads, number one, because it gives me consistent monthly income, which is what I'm looking for. It's simple and repeatable mechanical trades. They're simple to put on. They don't take a ton of different work to do. There's no complex technical analysis involved, a little bit of TA, and we're going to talk about that, okay? But not a lot of complex stuff and that we have to look at, okay? They can be scaled for different account sizes. So whether I'm trading a $5,000 or $4,000 account, or I'm trading a $10,000, $20,000 account, a $50,000, $100,000 account, $200,000 account, $1 million accounts, IRAs, it doesn't matter. Credit spreads are scalable in any account that you might be trading. And they work both great in IRAs as well as regular trading accounts. Okay? And the other thing I like too is that they have a very high win rate. And I like winning a lot. So the more I can win, the better I feel and the more confident I am in my trading. I just like win rates. Okay? Buying options, some of these guys have very low win rates, 40, 50%, but when they do win, they win big. When they lose small. Great. That's just not for me. I can't stand losing 60% of my trades. Okay? It's just not for me. It doesn't help me move forward. All right. So tip number one, when trading credit spreads, selecting the right assets. So it's all about finding those golden nuggets, those assets that they play nicely with credit spreads. So let's take a look at what we're looking for. Number one, highly liquid assets that offer weekly options. I'm not trading it if I can't get weekly options on it. It means there's not enough liquidity. I can't get in and out, and I don't have the range of strikes and expirations that I want to be successful. Number two, large companies, okay, solid growth companies, in my opinion, as well as indexes, ETFs, or futures. Okay? And futures are my preferred way of going. I love trading futures because you get great liquidity. They're highly leveraged assets, okay? And they usually trade pretty well, and they're not exactly correlated with everything else. Yes, there's some correlation in there, but you can diversify with a lot of different futures assets. Whether, and if you're trading in the market, well, whether you buy Amazon or Meta or Salesforce or Microsoft, they're all tech related, okay? So I want to make sure I'm diversifying a bit with those, but I like large, stable companies that I can bet on that have a little bit more of a consistent path to them, okay? Also, I'm looking that there's no earnings near term, so I don't want to be putting these trades on when earnings are coming up within my preferred cycle. And then a little TNA. So let's talk about that here, but I want to talk about some of the technical analysis that I do, which is going to be really basic here. I'm going to look at two things. I'm going to look at the weekly chart, and I'm going to look at the daily chart. Okay? And I like to have them side by side, but you can toggle between them if you want. And I'm going to look at really two key indicators. I'm going to look at MACD, and I'm going to use the standard MACD setups. And then I'm also going to look at RSI, and I'm going to look at a pretty standard RSI setup, maybe a small tweak, but you can use standard RSI as well. And when I'm looking at the MACD, I want it rising and or reversing or both. Okay? And number two, when I'm looking at RSI, I want that rising as well on both the weekly and the daily. So I just want it rising. I just don't want it to be overbought. If I'm somewhere around the 50 mark and moving higher, beautiful to me. So that means I've got a lot of runway still to go to the upside before I get to an overbought territory. So MACD rising, RSI rising, and I'm looking for maybe some clear support levels, but I'm not getting too carried away here. Let's look at some examples. So let's dive into our trading platform. And for this one, we're going to use Thinkorswim. So we're going to use the TOS platform and jump into it. I just happen to have a chart pulled up because someone was asking questions earlier about bonds. So let's look at ZB and let's see if this qualify. So when I look at the weekly on the left-hand side here, is MACD rising? Yes, it has reversed back here. This is the weekly. It reversed 3 weeks ago, and it's starting to head higher. And then if I look at RSI, it has also reversed, barely starting to head higher. I would like to see it closer to 50. It's at 32. It's a little low for me, but technically both things are in alignment. Let's go over to the daily chart here. If I look at the daily, RSI is definitely rising. It's almost to the 50, and RSI was falling. So the momentum on the downtrend was coming to an end, and now we've got a move higher on MACD. This might be a little too early to get into. However, it is matching up with some of the core criteria. And is there a key support level? Well, heck yeah, there is. So right about this 117 level is where we have been previously, and then recently again, just a couple days ago. And that's a good solid support level. So if I'm selling something below that, it's a good looking trade. All right, so there's one particular stock that just happened to be up here. Let's just sift through a few things. Let's take a look at, let's jump into SPY real quick. So if we look at SPY here, if I'm on the weekly, and let's zoom in a tad on the weekly and the daily. On the weekly, is MACD rising? No, it is falling slightly. Is RSI rising? It's kind of neutral, but it is above 50. So that's okay. Let's look at the daily. Is the daily rising? No, the daily MACD is falling and the daily RSI is falling. It is above 50 though, but there's not enough here for me to think I want to go in on SPY at this point in time because I don't have really everything lined up. Let's look at the Qs. So if I'm looking at the Qs here, weekly, MACD is falling, RSI is rising, okay, but yet one, it's already falling. And if I look at the daily here, MACD is falling it's a no-no. Let's look at IWM. How's IWM looking? Well, MACD is falling, so it's pretty much a no as well. And then RSI is falling as well. And then on the daily, same thing, falling. IWM is out. And then let's take a look at a few other things. Maybe we'll look at TLT. Is TLT something to get into right now? Well, if we look at the weekly, MACD is reversing and moving higher. RSI was just oversold and is now starting to move higher, but not by a lot. So it's kind of a maybe. And if I look at the daily, we've got MACD starting to move higher and RSI starting to move higher to 50. So it technically is going to fit my criteria. So MACD is rising. RSI on the weekly is rising, even though it's flat, and the daily is both of those are rising. And we do have a pretty clear support level down here around $91, $92. So we can even extend this thing out a bit more. But as we look at this, this one might be a potential. So there's one, jot it down. We'll take a look at that, see if we can make that work. Then we could look at maybe some of the futures. I love looking at futures here. The Aussie dollar does have MACD starting to reverse higher, as well as RSI on the weekly, but the daily RSI is not really moving higher yet, not seeing higher highs. So that's a no right now. 6B, which is your British pound, it's a no. The weekly doesn't fit the criteria. C, the Canadian dollar. Now, it is starting to reverse on the weekly, and the daily would fit our criteria of MACD rising, RSI rising. It's not a perfect setup yet. I would like to see maybe one more week of MACD rising. So I'll probably put that one on hold, put it on a watch list. If we look at the euro, it's a no. MACD on the weekly is dropping. If we look at oil, it's moving higher on the weekly and the daily, or the weekly MACD and RSI. However, on the daily MACD, it is starting to roll over a bit. And one of my criteria that we talked about was I don't want it overbought. And you can see RSI here on the weekly is just getting into overbought, and the RSI on the daily is already overbought. So I'm not doing anything on an overbought. We're just talking really put credit spreads today. For these types of setups. Gold, no. Our MACD is down. Here on HE, not too bad on lean hogs. This is moving up daily on the weekly, and it's also moving up on the daily. Not a bad potential opportunity. So we could do something on HE. And then let's just jump into a couple quick sectors. And XLY. It's really tough to see this. MACD is pretty flat, but it has a reversal today. RSI is running higher, and both of those are moving higher on the daily. So XLY may not be a bad one. It's not really super convincing right now, but that may not be something. And I'm going to skip into just a couple of the major stocks. Amazon, okay, MACD is falling, and it's also oversold on the weekly, so no. Apple, MACD is falling, RSI is falling on a weekly, that's a no. The weekly is your setup. The weekly is going to tell you if you should even bother looking at the daily. Let's look at Microsoft. So Microsoft, RSI is moving higher, and MACD is starting to move higher. We jump over to the daily. It's kind of a mixed MACD, although it does have an up move today, but overall it was starting to tip over, and RSI has been a little sketchy. It technically qualifies, so Microsoft could be one. It's not the best setup. And then here's another one. Take a look at Meta. MACD is reversing on the weekly. I would like to see 2 weeks of up move as opposed to one, but it does fit the criteria on the daily. It does, the RSI is on both. So Meta's maybe not a bad one to take a look at. And just for the sake of things here, maybe let's take a look at something like, well, we could look at Tesla. And if you look at Tesla, yeah, this one does qualify as well. The MACD on the weekly, a little sketchy, but it is moving higher, as well as RSI on both the weekly, the daily. So this one would qualify. So Tesla is one that we'll put in here. So let's identify XLY and Tesla, and let's keep moving on what we're doing here. I want to keep this moving for you guys. So if we look at The next tip here is strike prices and expiry. Okay. So strike price and expiry. I'll show you how to choose the sweet spot for strike prices and expiry dates. No more guessing games here. And here's the importance of price selection and expiry date alignment with my strategies. Okay. Number one, I'm going to look to sell around 12 delta on the short strike. This is me. This is my trading style. This is not somebody else where they're trying to collect more and go higher. That's not how the way I do it. Okay. I'm looking around 12 delta. Could be 10, could be 14, could be 15. It's somewhere around that mark, but I'll peg it around 12 is where I'll start. And then depending on the asset, I'm looking to create my widths to be somewhere between 6 and 10% of my buying power. Why is that? Well, my personal goals is always a 3% annual return or a 3% monthly return, which puts me at a 33% annual return, 36% annual return. If this thing went all the way to expiration to win, it'll make 6%. But typically, I'm looking to take these off early, and I'm going to talk about that. But at a 50% profit, 50% of 6% is 3%. It hits my goal. So as long as at some point, while we have this thing open, I can close at 50%, and I had at least a 6% width that created a credit equal to 6% of my buying power, I'm in pretty good shape. All right. And then DTE, I'm looking at 25%, 25 to 30 days expiration. That's really going to be my strong suit. I want to be in that frame. Okay. So let's take a look before we jump into the next piece. Let's take a look at our trades and see if we can actually construct a trade that would make sense here. All right, so let's jump into our account on the session today. So here's our account on the day, and I'm not really going to go through what the positions are in the account, but let's trade something. All right, so we talked about XLY. So let's look at XLY, and we're going to go out to about 30 days, and we'll start there. And I'm going to drive down to about 12 delta to start with. Doesn't mean this is perfect. Okay, and I want to go wide enough to have somewhere between 6 and 10%. I'm going to start with 2 wide and take a look at this. So if I'm looking at a 2 wide here on XLY, what am I taking in? $14, and I'm going to use 186 down here in buying power. So $14 okay, is my max profit. 186 is my buying power. So when I divide 14 by 186, I get 7.5%. This makes sense. This fits the trade. Okay, so that would be the trade on XLY, looking at roughly the 161, 159. What if you go wider? How wide can you go until you no longer get into what you want? So 19 divided by 281 here, if I go 3 wide, 6.7%. I'm just on the cusp of it. And if I drop down to 157, okay, well, now I'm not making any because of the poor strike that you have down there. So I could go 161, 158. I really like the 161, 159. And what I want to know is, was the 161, and I know you can't really see this, but if I looked back at my sectors on XLY, was 161 below or near a support level? And the recent low was 161.26, which would technically be a somewhat of a support level that we have in here. So, and that's also the bottom edge of the Bollinger Band, and it's close to the 163 ATR. Lots of areas right there, right around this short strike to provide support. Checks off all my boxes for me, right? Another one is Tesla. So we've talked about Tesla and haven't really looked here, but let's look at 30 days. Now, if you notice, if we happen to go out a little further, we have earnings. So we're staying inside of earnings. We're going to go 30 days on Tesla, and I'm going to take a look at the 12 delta. Right now we have 11 out of 12. So we'll take a look at that, and then let's look at some of the widths that we can do. So this one is going to take in, if we did the 230, 225, I'm going to take in $55. Okay, it's going to use 444 in buying power, okay, which is going to be 12%. It's a pretty good return. It's a little larger than I normally would go, which means I could probably go wider Why not stick there? You absolutely can. But depending on how many contracts I would size up, I could size up a ton of contracts here at 5, but I could pay less commissions if I just go 10 wide, which is another consideration here. If I went 10 wide, I'd take in $98 on 902. That is a 10.8%, almost 11%. That also qualifies. So we've got a bunch of opportunities here on Tesla, and we'll leave that example go. All right, so we've now identified some technical analysis. What stocks do we like? Number 2, we looked at the charts to see they had weekly options, and we were able to go around 12 delta, and I was able to go wide enough to get that 6 to 10% credit to buying power. Okay, so that's 6 to 10% credit to buying power. All right, now let's look at the next phase. Okay, and the next phase is going to be mastering risk management here. So I'll spill the beans now on how I protect my hard-earned money and keep the profits rolling in. Sizing. Sizing is key. Size matters. Okay, so I'm going to size properly my max loss. So my maximum allowable loss, okay, on typically doing credit spreads in this account, okay, is about 1% of my net lick. 0.5% or 0.5% is probably more optimal for a larger account. This happened to be about a $305,000 account. But if I'm doing this in a smaller account, I might increase these to 2 to 5%. So in order to grow a smaller account, you're going to have to take a little more risk. I might be closer to 2, 3, 4%, something in that of my maximum allowable loss. My profit target is 50%. So I'm going to take profits at 50%. And my max loss is going to be a 2x loss, which means I'm going to set my stops at a 3x of my initial credit. Okay, so if they get stopped out, you stick to 3x loss minus your 1x initial credit that you got, and you're going to have a 2x loss. Let's look to see how we would size this Tesla trade. Okay, so let's go back in. We're going to keep looking at Tesla here. And as I mentioned, this is a $305,000 account that we're trading in. And if I'm maximum allowable loss, let's just say it's 1%. Okay, and 1% is going to be a $3,000 loss. So the most I want to lose on this trade is $3,000. Okay, which means I'm going to put it on for a credit of about $1,500. So I would have to increase my credits here till I got to a $1,500 credit. Okay, so I'm going to take in $1,500 on this trade. It's going to cost me $13,500 in buying power. Again, 1,500 divided by 13,500 here is going to be 11%. Okay, it's a little large, but I'll take it. Here, I'm going to have to do 15 contracts on this particular trade. Right, so I'm going to take in $15,000 or $1,500 on this particular trade. A 2x loss, which means my maximum loss would be twice my credit, would be a $3,000 loss. Okay, my normal sizing for this larger account is probably going to be even smaller than that, but you can go up to that, which means I'd probably be somewhere around 0.5%, which would be about $1,500 loss. So the most I would go might be $800 in profit. Okay, it's only one strategy. I'm not scaling up, but for many of you, you could certainly go 1-2% for your max loss. Okay, hope that makes sense for you. All right, so this is how I trade credit spreads. In fact, I like this Tesla trade. Maybe we put this on in here and watch Tesla. One of the keys on the Tesla trade is, and let's take a quick look at Tesla overall. Let's go back. So this is a 230, 220 on Tesla. I'm going to write that down. So 230, 220 credit spread. I'm taking in $800 on this. So I'm getting $1 in credit on this. And then let's take a look back at the chart really quickly to see, does this make sense? Where do we have some support? Well, we have support down here, right around, I'd say about the 217-ish number. And if we look at the weekly, about the 226, 2 is the 50 moving average. So somewhere in this 220 range. Now, we were talking about the 230 strike. It's a little above what I would consider some support in here. However, it gives it a little bit of room on the weekly. I think that number makes a little bit more sense on a pullback. So Tesla could be one of those trades that you take a look at. Anyway, I just want to give you that as an example, just to make sure that maybe there's some support above or below that. And then the last piece here, okay, is you're the hero here. So remember, the journey might be bumpy, but the destination's worth it. You may have had trouble with all kinds of other trades, following all kinds of crazy furus out there and gurus, all kinds of trips and ticks, trips out there that are going to take your money. Maybe some of them will pay off for some of you. But if you've really not been consistent, slow down, start selling options, start with selling credit spreads, maybe put credit spreads when the market's in a bull trend like we are now. We're above the 200 moving average on the daily and the weekly. That's an up market, in my opinion. So when we're in an up market, I would be selling with the trend, which means I'd be selling put spreads. So don't forget to like and comment this video. The destination's absolutely worth it. If you liked it, please click the like button. Subscribe if you haven't subscribed before. Come and join, see what we're doing in our trade rooms here. And remember, in trading, you're the hero of your journey. You're the hero of your own story. It's time to write your own story and be successful in trading. Thanks for joining me. I hope this was helpful to you. We'll see you on the trade floor. Thanks, everybody. Bye-bye.